He joins me now. Sir, what bragging rights are you claiming vis-à-vis London for Euronext?
Well, the numbers released by Bloomberg just show that London is not as attractive as it used to be as the natural listing venue in Europe. That's the consequence of Brexit, as you mentioned it. And in parallel to Brexit taking place in the UK between 2016 and 2020, we created on the continent and in Dublin an alternative to London, which is an integrated market, which is far bigger than the London one. The aggregate market capitalizations on the integrated single liquidity pool we have built in Europe is approximately 5.7 to 6 trillion euros. So it's approximately twice the size of London. And the liquidity pool, the average daily volumes traded on the Euronext platforms in Europe are about between 12 and 13 billion euro per day. So it's about twice the size of the London market. So that's a consequence of Brexit and a consequence of the construction of an integrated platform.
Right,
through the
but
Euronext
you wouldn't.
project.
Maybe it's the Brit in me that feels sort of the need to rush to the defences and shore them up, to sort of say, but London obviously still has, if you like, the critical mass, lawyers, advisors, markets, forex, debt markets, that no single European city, capital otherwise, has.
That's probably true. That's what the situation is today. I'm just trying to highlight that what we have created in Europe is an integrated equity market with a single liquidity pool, a single order book, a single technology platform. So you are probably right, but I just want to highlight that the consequences of Brexit are there, and they are happening because London used to be the largest financial center of the European Union. It's now the largest financial center of the United Kingdom, with a global ambition to be built on the basis of the strong assets you have mentioned. So this is what it is. But as far as equity, listing, trading are concerned, as far as financing the real economy is concerned, that the Universal Music Group is listed in Euronext Amsterdam. Ryanair has decided to delist from London to be listed on Euronext Dublin, and that's a trend which is there for equity.
So what do you now need in terms of these markets? Because you've got Dublin, Amsterdam, Paris, but you need the European Union and the Commission to come forward with greater proposals of integration, don't you, to fully benefit from this. So forget London. Looking at Europe per se, what would you like to see in the new financial regulation that allows you to grow these various markets more efficiently?
Well, first of all, we already trade 25% of the equities traded in Europe are traded on Euronext markets, and the European Union is very proactively building the capital market union. With just a few days ago, the release of a new project to have a sort of European S1 form, and all of your viewers who are familiar with the equity capital markets in New York know what an S1 form is: a single European prospectus in the same shape all over the block, all over the continent, and there is a whole series of measures on clearing, on post-trade in particular, that are going to shape on insolvency laws, that are going to shape a framework which is going to accelerate the formation of a single market for financial purposes. And this is happening. It's always slow. It's always more complicated to do it in a bottom-up way than in a top-down way, as in the US, but it is happening for real.
Good to see you, sir. I'm grateful. Thank you for joining us.